Yeah, so we finished the fiscal year down 0.6%, and that was heavily driven by our Latin America region. For perspective, if you exclude Latin America from the group, we actually grew net sales plus 1.8%. It's no doubt been a challenging year. It's been challenging for us. It's been challenging for the industry. But I was quite pleased that in the second half of the year, we really picked up share momentum in a lot of our key markets like the U.S., like China. And pleased to report that by the end of the fiscal, we are holding or gaining share in 75% of our total net sales in measured markets. We also delivered a record year in productivity, $700 million, and that helped us to give great free cash flow, $2.6 billion. That's an improvement versus prior year, despite that softer top line. Look, within the U.S., we are navigating an environment. We're not unlike other consumer-facing companies. The U.S. is a cautious consumer, is what we're calling it. Cautious spending, pressured wallets, 30-year high food basket prices, and that has certainly impacted us. But as I mentioned earlier, the U.S. is one of the markets that we're gaining share, and we got great brand performance from brands like Don Julio, plus 12%, brands like Guinness, plus 6%. This is, gosh, it's our seventh consecutive half reporting double-digit growth on Guinness as a global group.
Debra, what happens then, that post-pandemic surge in what was expensive spirits then, ultimately called premiumization, is that beginning to fade now? Because you're beginning to see perhaps some inventory being unsold in certain parts. Are you beginning to feel that impact?
Yeah, so this is part of what we experienced in Latin America. We did see down trading, and you can see some of that in our numbers. From out of Latin America, it was down trading in Scotch and tequila, which is of course big in those markets. And so we've also seen some down trading a bit elsewhere in the world. But fortunately, we've got a broad portfolio across all of these different segments, across price points. So that's one of the ways that we've been able to navigate it. In addition, some of our brands like Guinness are quite premium. And so, we're pleased to see that, brands that are really, cutting through with the consumer, we're still seeing that premiumization. Don Julio is also a premium brand. Johnny Walker, we're gaining share in 9 of our top 10 largest Scotch markets. So we are able to cut through when we connect with the consumer, and we're seeing that in our big global brands. We're also seeing that with our innovation.
Yeah, and Debra, as a non-drinker now, I think one of your products is absolutely fantastic, but we won't go into that one at all. APAC as well. I'm just looking at the volume figures there. APAC falling 15%. By and large, just matching the trend we're seeing elsewhere as well. Should I be worried about the China situation as well?
Well, actually, in China, we're posting plus 12% growth in China, and it's really driven off of we're one of the few Western companies that have a Chinese white spirits business, Baijiu, Shui Jingfang, and so we had great business there. Of course, that is lapping still COVID closures from the prior year, and so with that reopening, we are seeing kind of corporate events come back. Gifting is softer, and we are seeing some down trading in our Scotch portfolio there. So we're navigating it through, but I think that the strength of our portfolio and the diversity there is helping us navigate, what's happening there in China and with the Chinese consumer.